All right, hello everyone. Welcome to this week's kind of weekly live stream Matt and I are doing with our Good Soil Investment YouTube channel. Again, we're trying. Last week I think went pretty smoothly with doing the Twitter Spaces and the YouTube Live at the same time. Um, if anyone thinks the audio is off or anything seems bad quality, please give us some feedback. But I think last week it went smoothly. It seems to be for us the golden grail of live streaming to do Twitter Spaces and YouTube Live at the same time. So, um, yeah, today just there's a disclosure on the YouTube Live channel, and just a disclosure for everyone who on Spaces. None of this is investment advice. We are not registered investment advisors, and we're just talking about our thoughts about investing in stocks that we like, and that's all we're doing. So we're happy to go over that publicly with everyone once a week, and that's what we're doing here. And then we'll the outline normally is we start talking about kind of macro markets, and then we zero in more on stock specific things. This week it'll be Rocket Lab. They had their earnings yesterday. Then Tesla. We'll talk about Elon and his tweets about taxes and the price action of Tesla and such. And then we'll go over a bunch of Q&A at the end. We'll aim to have this all wrapped up in about an hour. So hope you guys enjoy. So yeah, Matt, how's it going? You have it's Rocket Lab had a great. We'll talk about that in a minute, but first, I guess the infrastructure bill and the macro markets. It seems like the stock market's still hovering at all-time highs. Continuing to go up slowly but surely, melting up, and this infrastructure bill was just passed, and there's talk of Powell being replaced. What are your thoughts about all this?
Yeah, there's there's a lot of stuff going on, kind of all at once. So trying to make sense of it, it's a green day for a lot of the stocks that we love. Tesla's up almost 3%. I think Rocket Lab was up 7 or 8% last I looked. Roblox was up around 10%. So definitely good day for the names that we follow closely. And I think the infrastructure bill passing. I think it just passed the House, so it's not. It still needs to be reconciled with the Senate version before it officially kind of becomes the law of the land. But I think that's most commentators think that's kind of a likely outcome. So it's kind of interesting. On the one hand, you've got this infrastructure bill, which is kind of more government spending, which of course boosts the economy and it just kind of increases the circulation of the money supply, and it's kind of the just an extension of the overall policies, which have really benefited the stock market so much since COVID really came into play, and in fact even longer than that. So that certainly has been kind of a boost to the economy, but then on the monetary policy side, you've got, yeah, as you mentioned, talk of Powell being replaced as Fed chair by Lael Brainerd, who's a little bit, I don't want to say antagonistic, but has a little bit more of a, would like to see some tighter regulations on Wall Street. And I think one of the main concerns of the Biden administration is just not letting inflation kind of get away. So, it is just kind of interesting when you've got Biden, passing a huge spending bill, which will kind of create some more inflationary pressures. And then at the same time, when they're trying to pick a Fed chair, inflation and keeping that under wraps is one of their, most urgent concerns. So there's a little bit of, two different minds, I think, at work at once in the economy here. And it's going to be curious to see how it all pans out. I mean, the modern monetary theory proponents will say it doesn't, really matter. And, you can just keep spending. And I think there's a lot of folks who also, sort of think, well, you're with the level of debt as it stands right now, the best way to fight inflation is going to be to raise rates, but you can't really do that without, kind of drastic pressure on the debt service. So it's a
conundrum.
It's going to be tricky. Yeah. What's your thought on kind of how that's going to pan out? I mean, I think in the short term things are okay, but longer term, I could see it, kind of breaking down.
Yeah, it's kind of a dance that the policymakers have to do, and I feel like maybe Japan has gone through something similar for a while. this guy, I tweeted a while ago. This guy Victor Shvets wrote this book called The Great Rupture, yeah, that's the name of the book. I got it right here. Just looking at the title, The Great Rupture, and I heard a couple of his podcast interviews. I haven't read the whole book yet, but his interviews get across the gist of his thinking about how we're kind of, major, federal banks are going to be dancing this fine line of inflation versus raising interest rates versus like using modern monetary theory tactics, and we're kind of stuck in that. And you have technology deflationary pressures at the same time because technology makes everything more efficient, but at the same time there's some kind of inflationary symptoms going on. And it seems like the stock market and equities are a great beneficiary. Both those things are good for equity prices, stock prices. Both, true inflation makes stock prices more higher, but also the increased earnings efficiency of these companies through technology makes the stocks thrive as well. So it seems like the stock market is going up. Is going to continue going up for a while, in my opinion. A lot of people say bubble, but I don't think so. I mean, there'll be 5% pullbacks, maybe a 10% pullback again at some point, but we're just going to melt up, further for a while, I think. And interest rates will stay, we'll always be talking about interest rates being risen soon or whatnot, but I think they're never going to go above like 2%. Maybe they'll be like 1.5. I don't know. Like, we're never going to go back to like the 4% interest rate days or above that. It just seems like that's too far off now with the debt that the government has, like you said.
Yeah, it does. So, I mean, that almost sounds like a crazy thing to say that, we're never going to see 4% interest rates again, which, 5 years ago, there's no way I would have, bought into that notion.
Yeah.
But if you think through the implications of what that would mean to, government spending on debt service, I think there's kind of a strong case to be made that, yeah, while inflation is bad, and fighting it by raising rates is, the kind of historical norm. There's never been, this sort of kind of debt overhang where, the debt service is manageable right now. But if you doubled interest rates, it will be completely unmanageable. I mean, it would kind of take over a good portion of the entire economy. I think, while it may seem counterintuitive, I do sort of agree with you that at least I don't want to say never, but in the foreseeable future, it's hard to imagine rates really rising.
Yeah, absolutely. So yeah, moving on to stocks. I mean, man, we didn't have on the schedule to talk about Roblox. We talked about that in the past, but they're really on a tear today. There's Investor Day going on as we speak, so I'm definitely going to listen to that later. I think there's some big like educational partnership announcements, and it looks like investors are loving Investor Day with the stock up 10%. Really ripping it, almost at $120 a share now. Wow. We're at new territory on Roblox, but we're really going to go into Rocket Lab and Tesla most of this call, and we'll answer questions about whatever later. But I guess we'll move on to like Rocket Lab here, and they had their earnings report. What was your impressions from the earnings, Matt?
Yeah, so it's interesting just in the stage of growth that they're in. I mean, their revenue is pretty small. I mean, it's like in the $30 to $40 million range. And the company's valued at $6.5 billion. So with the company just at this stage of growth that they're in, their earnings matter to some extent, but I think the much more important driver is just kind of the overall growth narrative. And so the things that really supported that out of this call, and in fact they had an announcement that was kind of paired with earnings that they acquired this company, Planetary Systems Corp, which kind of specializes in separation hardware. So the second stage, which has the satellites, kind of attached to that bus, they make the separation hardware for those satellites. So the things that I think really strengthened the long-term narrative, the biggest one in my mind was the backlog. So on June 30th, they had a backlog of $141 million. And just 3.5 months later, as of yesterday, I think it had grown almost $100 million to $237 million. So just crazy growth in backlog there. So that was, I think, really indicative of the demand that they're seeing. So I thought that was very good news. But they spoke a lot on the call about kind of efficiencies and some of the stuff. It sounds like there's going to be some announcements on Neutron coming up pretty soon. So it's going to be really exciting to hear what they say about that. But really, it was just a very strong earnings period. I think one of the other takeaways I have is that Peter Beck, he seems to be one of those types of people where he's not going to say, oh, we're going to like go to Mars in the next 18 months, and then, it's like Elon time and it doesn't happen. He's much more like, we're working on something, we've got it, like going, we're going to kind of downplay expectations and then just kind of deliver more than people are expecting. So he's done that a few times already. And this time around, they actually beat their revenue guidance. They beat the high end of their revenue guidance for this quarter, which, as I said earlier, is not the biggest deal in the world for a company at this stage of growth. But to me, it's kind of setting this pattern where he's not trying to set these crazy ambitions and get the stock up to like $30 billion in a hurry. I think in the opposite, he's actually trying to kind of just make progress as fast as possible. Kind of this ruthless efficiency that we talked about on that space industry roundtable discussion, which if anyone listening hasn't listened to that, I'd recommend checking that out on our YouTube channel. It was a really fascinating discussion.
Yeah, I think that's really important for us at least, and we just are trying to open source more of our research process in those ways. Like, we didn't really have a big outline to go over with those guys. We didn't really prepare much. We had some ideas of questions asked, and instead of just talking privately, we decided to just have our chat, virtually, and record it and then post it so that others can hopefully benefit from the same type of research Matt and I are doing on the space industry and space. I think it's important to understand that context in order to have a feel for these companies, whether it's Rocket Lab, SpaceX, Astra, Firefly, Relativity, Space, all these companies. And there's a lot of startups they were talked about, but just that context of the discussion we had there, it was really helpful for us personally. I think anyone else who's ever interested in investing in space companies. But anyway, go on, Matt. Sorry.
Yeah, no, it's a good point. But I was just kind of saying, one of the things we touched on there was just how kind of like ruthlessly efficient and like focused on like pulling up timelines and timeframes, and kind of under promising and over delivering. That seems to be very much in Peter Beck's kind of just stitched into his DNA with the way that he's running this company. And so I think you're kind of seeing that again. I mean, like with this acquisition, they talked about essentially being able to meet customers' needs even quicker just by acquiring this company. So sure, they'll be acquiring kind of growing some extra revenue that they intend to continue to service other customers. But really, they're trying to say, how can we make going to space as pain-free as possible for these small sat launchers? And so this is just another way to kind of pull up timeframes on their development cycle. And so they're going to be, I think, continuing to make moves like this, where they're just pulling up timetables and focused on delivering extra customer value, while kind of minimizing capital spend and minimizing O&M overhang. So he's just got an amazing mix, I think, of technical capabilities for launch, but also like an extreme focus on like efficiency and things that an investor should really like. He's not doing this as a hobby.
Yeah.
So I don't know. What were your thoughts?
I loved it. I mean, I listened to the call. I listened to it, 2 times again this morning, and I really like that the CFO reaffirmed that they have more than enough capital to develop Neutron and constellations in the future, satellite constellations, and they don't need to raise. They don't need to raise any more debt or capital from the equity markets. They have plenty of capital. They have, like, I think, $800 million in cash or something, close to $780 million or something like that in cash on hand. So it's more than enough to finish developing Neutron, and they have enough to like make acquisitions like they're doing, because they want to be end-to-end space services company too. They want to provide not just launch capability. That's what everyone talks about now, but space services. The traction, wheels,
reaction wheels.
Reaction wheels.
Yeah.
We asked on our roundtable discussion about that, and I learned about that. What the reaction wheels are. They help kind of turn and navigate, tilt the satellites in orbit to be the right, placement and direction that they need to be facing and such. So there's all kinds of. They just announced yesterday their acquisition of the company to kind of help with the launch separation. And so they're trying to build out their. It's almost like they're building a conglomerate of space services that they're putting together so that they can provide the all-in solution for end-to-end space. Business, from the launch to the orbital services to the satellite building. They're just trying to be the one-stop shop, and so I think
Yeah.
that's a really interesting strategy that could really play out well. And I'm excited. I think, Peter Beck, he continues to impress me. He was on this morning with CNBC talking about things. Really sad about that Russia blew up its own satellite to, created all the space debris, and just that type of thing is as a risk. I think actually, that's one risk
Yeah.
is new to me that I just became aware of yesterday when I saw that. I was like, what if Russia decides to just like end the game for everyone because they know they can't win it, and just blow up a bunch of their satellites to create so much space debris no one could do anything in space anymore? I mean, that could happen, right? I mean,
Yeah, it can, but within specific orbits. And I think the bigger and more centralized your stations are, the more risk you have. So like the International Space Station, I think could be at particular risk, just because
yeah,
such a large facility and you've got kind of humans in there. It seems like very bad news for kind of continued human presence in low Earth orbit.
yeah,
Um, but I do think, like the Starlink, for example, that SpaceX has, it's in an incredibly low orbit relative to most of the other satellites around there.
hmm
So, you could lose one or, 50 or 100 even of those satellites, and it, wouldn't necessarily be the end of the world. So, um, yeah, it is a new risk though. And it's not a new risk, but like you were saying, it was new to me, and
yeah,
it does seem like a pretty
a
consequential
threat.
risk, a threat. Yeah.
Yeah.
But I think it will favor small sat providers, honestly.
hmm
It's bad news for ULA as far as I can tell, because
Yeah.
any larger launch vehicles, you're putting tens of millions of dollars towards these satellites, or hundreds of
At
millions
risk.
at
Yeah.
risk. And yeah, it's going to be hard to insure. It's going to be hard to justify it if that gets out of hand.
It could be an interesting new business case for Rocket Lab too. Didn't they sign that deal with that Japanese company, to put up a rocket or a satellite that's purpose is to like, collect some space debris and help clean up space debris? I forget the name of the Japanese company, but it seems like Rocket Lab, Peter Beck, he's focused on sustainability in space. He's mentioned a number of times. He's built, and I think it could be an interesting new business case is like cleaning up space, and Rocket Lab could be at the forefront of that as well, with all the space debris.
Yeah, yeah. They had like a demonstration contract with that company. So
hmm
I don't know too much about it to know how scalable that could be. But yeah, maybe that is the wrong way to think about it as a risk. It could also be an opportunity for them to
Yeah.
kind of clean that up.
Yeah, yeah, it could be it's a risk for the space industry at large advancing, but it could be an opportunity for the business of Rocket Lab and the share price. So, yeah, I liked everything I heard on the share on the investor call, and the stock is up 8% today. I think the biggest thing about Rocket Lab, that people are unaware of is that people are unaware of Rocket Lab. So it's like I think all of us, we've been talking about it. We've been talking about it all the time, me and you, Matt, for few months now, and I don't see anyone else talking about it really. So it's still
Mhm.
early days, and that awareness is still not really there. And when that awareness picks up, like then the stock price, we'll see what happens. But for it to be kind of creeping up like this with very low awareness as it is very bullish to me. And investors like institutional, they didn't have a traditional IPO where the investment banks are running this, marketing this firm to all their institutional investors, hardcore, like to do with any IPO on a roadshow and such. So this was like a SPAC, and so um, you know I think there's a lot of awareness among institutional investors yet to be had with Rocket Lab. And as that awareness picks up, with an earnings report like yesterday, as they do more launches, they have a launch. I think it was supposed to be today, but they pushed it back till tomorrow or the next day because of some wind. But if they get that launch going, they have their next launch in December. And then they mentioned there's going to be a number of launches, a lot of Peter Beck said there's a lot of product to move, he said, on the floor, basically a ton of launches to do in 2022. So it seems like it's going to be very busy with launches in 2022. And so I'm excited to see the awareness that really picks up as they're doing, a dozen launches or more perhaps in 2022. Like only have we seen SpaceX do that to this date. Like people are
Yeah.
not really aware of Rocket Lab. So awareness will pick up, and it's exciting. So I'm psyched for this decision. We wish it dipped. We were talking about buying more, but we were hoping it would dip, but it didn't dip anytime recently enough where we were able to execute our orders to buy more. But yeah.
Yeah, I mean, and I think a lot of people, just speaking to the lack of awareness, they don't really understand, kind of the end game, which we were talking about a lot on that roundtable of,
Yeah.
like the end game for, a company doing launches like Rocket Lab or SpaceX is not, to own the lion's share of low Earth orbit launches, because that's, a relatively small pie. That's going to be very limiting to market cap and revenue and everything like that. So
Yeah.
I think the way to think about it is the services that an integrated provider can provide, like Starlink for SpaceX, and Rocket Lab does have its own services that it's aiming to be able to provide. In order to really do that, you need to be vertically integrated, and you need to have a very strong technical capability at low launch cost. And Rocket Lab is doing those things. I mean, they've got the best flight heritage aside from SpaceX out there. So to me, it's I
Really
think
the only flight heritage, almost really the only flight heritage. Yeah,
right.
I mean,
With commercial, I think one other company I believe reached low Earth orbit, but to do so commercially, repeatably, nobody else is doing it.
That's right.
So, I think if you just add up the total market cap of SpaceX and all these other companies, I mean, that number is too low. I think it's less than $200 billion. And I think over the next decade, the market's going to wake up and realize, oh, shoot, there's a whole host of valuable services that are being provided here on Earth from all these launch providers that are operating these constellations. Which right now we're just kind of at the very beginning stages of that. So my sense is all boats are going to rise within this industry, and Rocket Lab. I think if you look at the valuation of Rocket Lab, we were saying this a little bit on the call relative to a company like Virgin Galactic, which doesn't have any credible path forward to scale.
That's right.
It's just very clear that the market can't marry, the forward-looking market with the current technical capabilities. There's a huge disconnect there. So that's why I think there's an opportunity to exploit that right now.
That's right. Yeah. So, a couple of days we'll have hopefully the next launch of Rocket Lab's Electron satellite for Black Sky or something. Their satellite or whatnot. But I'll watch that for sure, and let's see how that goes. So let's move on to Tesla, the main event. This is our highest conviction name. This is what we have most of our personal assets in. Most of our fund is in not most of our fund, but the highest percent, by far the highest position in our fund is Tesla. And we've talked about it many times. We follow it, like crazy, so does many of our followers and such, and many people listening. I mean, the price action today, it's a nice rebound as we're talking. It's around 139. I see the last price, 1,039. So it's nice to stay above $1,000 convincingly right now versus yesterday. We were like 980s, and wasn't sure if we were going to keep that or not. But I mean, the price action, a lot of it's a result of Elon selling, the writing on the wall, or the evidence of Elon selling pieces of his ownership a day at a time. I don't think his selling of 1 million shares a day or whatever it is itself dragging the price down. I think it's more all the people trying to kind of front run it, or people hesitant to buy into it, or the week longs that are scared out and waiting until this news is over, this overhang is over before they get back in, for example. And so I think all that has kind of dragged the price down significantly further than it would be if Elon was just selling it without having to report the Form 4s or without having to tell anyone. I don't know. What do you think about this price action, Matt?
Yeah, I do think you're right. I mean, he's relative to what's been disclosed right now, I think he's targeting to close around 17 million shares or sell 17 million shares, somewhere in that neighborhood. And he's a little bit less than halfway through that now. So I mean, it seems that if there was no disclosure around any of this and he was just doing it without any kind of reporting requirement, I can't imagine the stock would be down quite this much. So it does seem to me the most likely explanation for this big of a movement is you've got longs who are on the sidelines right now. They don't want to buy more until there's clarity and this kind of round of selling has been put to an end. So there's just it's just a distraction that a lot of people I think don't want to deal with. And then Gary Black and I think some others have commented that there are some hedge funds or others out there that are kind of front running this, like you said. And I think that could certainly be the case that they're selling or buying puts or in some manner kind of trying to get ahead of this trade. So to me that does make sense. And I would imagine whenever we get to the point where this kind of we get that confirmation that Elon is done, I think there's going to be a pretty strong rebound. Not financial advice, clearly. I mean, anything can happen in the short term, but the magnitude of the move down and just kind of how volatile the stock had been leading into that does make me think that there's a good amount of capital, dry powder, kind of sitting on the sidelines, waiting for that right moment to kind of get back in. So we'll see.
Yeah. Yeah, I mean, there's early, once he sells the rest of his shares, or once I think market participants kind of come to consensus that he's just about done selling his shares, then there's no more negative overhang and a lot of buyers come back to the stock. And not just that, but also there's early indications if you follow, all the Tesla news, Twitterverse and podcasts and such, there's very early indications here that delivery numbers and production are going to be exceptionally strong for the fourth quarter, much higher than I anticipated, a few weeks ago, something like 280,000 cars or maybe more produced and delivered, and much of that coming from China and exported from China to Europe, which is their highest margin cars. So Matt and I were kind of fiddling with his model yesterday a little bit, and maybe in a week or two we'll kind of show it again on here. But yeah, early indications are that the fourth quarter, earnings per share and gross margins and all that could be really impressive. And we'll see what happens, but there could be a really nice setup here if the macro markets continue to cooperate, and if this melt up continues to new all-time highs in the macro markets. I don't see how Tesla does not also reach new all-time highs if that happens. But this is not investment advice. This is just our thoughts. Everything is a probability weighted thing. So we have our own probabilities we kind of put on things, and we analyze where we think the price could get, and we encourage everyone else to do that. I think maybe one day we'll go over, I know I've done it in the past with like Dave Lee on his channel, but maybe one day we'll try to go over the Interactive Brokers Probability Lab and how we kind of think about using that for picking options contracts. Because people are always asking me, private messaging me, like, what option contract should I buy, or what this or that? And you can't answer people on that. Like, people have to make up their own mind. But what we can do maybe is show people some of the tools that we use to kind of pick those options that we decide on without, giving it. So it's not investment advice, just showing people the different tools that we like to use for picking options.
Yeah. And people need to be, cautious. Emmet and I think, have a pretty high risk tolerance. We understand that there's a good chance any option you buy can go to zero. So, just encourage people to really understand the risks associated with them and not just kind of get allured by the, crazy upside that you've heard about.
Yeah.
But yeah, I mean, to your point though, there's a lot of talk and kind of noise around, short-term stock movements and, kind of what's Elon doing, and oh, look at his crazy tweets, and he's, upsetting Biden and Bernie Sanders and everyone. But I think kind of lost in the noise, and I've kind of noticed this myself. Like I'm spending a lot of time on that stuff, which is really wasted time if you kind of think about it. And then people are missing the fact that China's reportedly, kind of going at a run rate of, well over 600,000 vehicles a year, right now, which is really encouraging. So yeah, when Emmett and I were going over the model yesterday, kind of focusing back on operational excellence, it was just kind of crazy to run through a few different scenarios, which are entirely plausible, but which have just like crazy margin impacts. And this is in the short term. I mean, I've been a huge kind of all-in Tesla bull for years now. But if you took me back 1 year ago or 2 years ago and said, Tesla's Q4 could look like, some of the scenarios we were modeling yesterday, I never would have believed that they would be able to come so far so fast. And it really is all on the back of their kind of manufacturing efficiency and the fact that demand is so high that they can run some of these price increases through.
Yeah.
So, in all the short-term chaos that we're seeing right now, I think a lot of the Tesla's actual achievements from the team on the ground are potentially being missed. And that's why I think I've got so much confidence in the company in the long term.
Yeah, absolutely. And this is not even talking about, just a few months ago, we were focused on full self-driving, the call option of that. We weren't even as focused on gross margins and production going so much higher than we thought. Right now, the biggest, catalysts for the actual stock price is better than we thought. Production out of China, especially Fremont too, maybe to a degree, but it seems like much of the efficiency is coming out of the Chinese factory. And then you also have so many other things just on the verge of becoming a huge catalyst, which is, the full self-driving beta 10.4 just came out. Matt, you just said you had your first impressive drive, and you've been pretty honest about your impressions of full self-driving beta. I mean, that's a pretty strong statement. But not only that, but Giga Austin is about to, like, any day now, I feel like there's going to be reports of trucks being exported of Model Ys from Giga Austin. Like, we're halfway through the fourth quarter. You got to think sometime during this fourth quarter, they're going to like export their first Model Ys out of Giga Austin, maybe not to actual delivered places yet, but they'll just be like, yeah, we started producing Model Ys out of Giga Austin now with all the advanced processes we have and such. And then 4680 battery cell production coming online any month now, I feel like, in Giga Austin and being ramped up elsewhere. This Tesla semis, it seemed like Elon passively affirmed that Pepsi is going to get 100 semi trucks, which he's trying to downplay. He's trying to throw cold water on the stock, and maybe he's trying to do that with
really
selling these shares too. But there's so many great things about to happen. It's like the opposite of what it used to be. Like years ago when I was founding Tesla, it was like Elon was a salesman and marketing genius, and like, talking up every possible thing that's positive for Tesla in the near future. And now he's almost doing the opposite, talking down every positive thing, whether it's the Hertz deal or whatever. It's just going to be really fun to watch the stock at this point. We'll have to see. It's a case study for the ages, for sure. Well, there'll be so many books written about this, about Tesla's run up and becoming the biggest company in the world and such. And it's just fun. I tried to, I think I sent out a survey. The Tesla short historian guy, he's one of my favorite Twitter followers. Is like, who would buy a coffee table book from this guy? I would certainly buy it. Of all the Tesla shorts in the past several years that have been saying it's going to go bankrupt, and it'd be so cool to have that coffee table book to like go through from time to time.
Yeah, like I would imagine 10 years from now, we'll kind of like, yeah, I kind of remember like Tesla Q was this thing, and like those guys were like wrong and like, just virulent. But I know I'm gonna forget like how ridiculous so many of these tweets were. So I think it'd be a good idea to have something, for posterity to kind of learn from. I mean,
yeah. Something documented a little better for entertainment purposes. Yeah.
And I don't want to just, dunk on them because, there are a lot of folks who, lost a lot of money, and I don't, kind of relish rubbing their noses in it. But the things they said and like the fact that they had like a block list. I mean, that was when I started getting really excited about the opportunity for Tesla to really go through the roof. I would try to have like measured conversations because I want to check my own biases and, get feedback where I'm wrong. And they had none of that. They're just like, oh, it's a fraud. It's gonna blow up. I'm gonna make so much money, and then I'm gonna, buy a gas guzzler. Like they just said the most ridiculous things.
Yeah. And
so
they convinced a few of the reporters and journalists to kind of get on their side. I'm not sure how. Whether it was like back channel, incentives of what given to some of these, bear reporters, like Laura Kolodny or, the guy from LA Times, Russ Mitchell, and even Dana Holt to an extent. She's kind of
she's a little bit more nuanced, but not a whole lot.
Yeah, she has to be because she represents Bloomberg, I think.
Charlie
but she is
Grant negative. Is like insane.
Charlie Grant
too.
Insane. Yeah, a lot of it, I think, part of this is you remember Enron and Jim Chanos kind of like discovered
Hmm.
Enron or whatever. Well, there was like some major like book deals given to some of the journalists that helped him cover it, I think. So I
Mm.
think there's like these journalists, they don't make a lot of money, right? They're just reporting on they're not like, they're probably not even allowed to like invest the stocks they cover. They're just watching people get rich on these stocks they cover. And they're like, I want to get rich too. And they realize, hey, if I can help unveil the next big short, I could be on the book deal and make millions of bucks on that book deal. And that's probably like, the carrot at the end of the stick they're trying to follow for this. That's my opinion of what's incentivizing them. Money in the end is what's incentivizing most people in these businesses. So but I think they totally missed the boat on Tesla. That's for sure. So we'll see. We'll see where it goes from here.
Yeah, it's just unfortunate because I really had a ton of respect for journalism growing up, and I learned a lot from some of the great journalists back in the day. Just reporting on really interesting stories, doing actual kind of like groundwork, reporting and kind
Yeah.
of deep undercover stuff or just like detailed analysis. And there just seems to be less and less of that these days, and more just kind of and part of it is just a impact of the kind of the economic incentives of things going online and needing to get clicks instead of like
Yeah.
just subscriptions to good quality journalism. So I do
Yeah.
think we should think about how we can better support good journalists who actually do the hard work. But
Yeah.
generally speaking, the quality of journalism has really gone down, and it's just like people who report on things don't really understand the nuanced details of what they're actually reporting on. And so
Yeah.
it's just a sad state of affairs because 95% of the people then who just read that, they think they have a general understanding of the way things are going in the market or with a particular company or topic, and they just don't. And so it's just sad. People really need to do their own research, but that does create opportunities.
Yeah. Yeah. Yeah, I see a lot of comments before we go to the Q&A. I see a lot of comments that about the options. A lot of people come here to kind of get options ideas, and we don't do any fancy options. We do sometimes we do, but mostly we just buy calls or buy puts, try to magnify returns. And how I've talked about in the past is, I try to think in my head in a probabilistic manner, and so for example, if I think Tesla's going to get to $2,000 a share by June of this year, and I think there's a 10% chance of that, let's say only, maybe or a 20% chance of that, let's say. So it's not likely to happen, but I think there's a 1 in 5 chance that Tesla gets $2,000 a share by June. I would look at the Interactive Brokers Probability Lab and see, okay, what is it pricing out to be 20%? And you can use it to see what the options market, the actual prices of the options market for different strikes in June are pricing the probability of Tesla to get to. And if, for example, if it showed Tesla only like a 5% chance of getting $2,000 a share by June of 2022, then maybe I'd be a buyer, because I also know I'm biased to be long Tesla. So I have to build in, a big handicap for me on my own probability weighting on top of the 20%. So if it was like 15%, I probably wouldn't. But if it was 10%, maybe 5%, I probably would dedicate some small amount of my capital to my trading capital to those options. This is an example of how I pick options. We'll put it on our list of things. One of these next weeks, we'll try to go into more detail about using the probability lab for that type of decision making, just so people can get a better idea of how to do it themselves. But again, I would just do it with, a certain amount of money I'm prepared to lose all of, right? So if I have my savings and retirement account, for retirement, let's say that's $50,000 and growing over the next 20 years till I retire. Well, maybe I have a $10,000 play money account I set up, and I can kind of play with that money with some options trades. And if I had that play money account and I want to do that option trade I just talked about, I wouldn't put all $10,000 in that trade if I only think it's a 20% chance of it getting to my target price. Maybe I wouldn't even put 2,000. I put like $1,000 of the 10,000, because then if it's right and it goes to like $2,200 or $2,300 and I bought them for like $10 or $20, maybe I'd get a 10x return on that 1,000. But most likely it'll be wrong and I'll just lose $1,000 of that 10,000 play money. But that's the way I would use options. That's how I've used options to get to where I'm at. It's worked for many years for me, but it may not work in the future. But it's definitely an interesting way to look at investing for disruptive companies. So sorry about that tangent, but let's go on. I guess we're kind of. I think we should just go into Q&A here, since we only have about 20 minutes or 25 minutes left. We usually try to have half the time for Q&A, since a lot of people are interested in asking questions. And we ask people to write questions in. I know we're on Twitter Spaces as well as YouTube Live, but if people want to write their questions on the Twitter thread or in the YouTube Live comments, then Alec behind the scenes here is kind of cut and pasting them into the video YouTube, so Matt and I can read it and answer them that way. So yeah, Alec, if you don't mind, maybe put up the first. So from Snow Day Trader, what effect do you think the current COVID measures in New Zealand could have on Rocket Lab in the short to medium term? Well, I think in the call yesterday, they did mention that as being like, a significant impact for why they haven't been able to do launches in the third quarter. Really, they didn't really have many launches in the third quarter, but I think it's easing up. I think one of the biggest points of friction is the fact that when they need to meet customers in person, maybe needs to help spec out a satellite they're building or whatever, and the customers have to travel from another country into New Zealand. It's problematic because of COVID, the tight measures that New Zealand has on COVID, traveling in and out of the country. So I think that's the biggest point of friction, it sounds like still. What do you think, Matt?
Yeah, I think it is. I mean, they were talking about how hard it is just to get some of their customers kind of in there, to set up. So that's been an issue. It's a timing issue, I think, really more than anything. And they do have that new Virginia facility in Chincoteague that should be opening up here pretty soon. They just got one of the key certifications they needed to get from NASA on the automatic abort system, I think it is. So they've gone through kind of a painful process to get around that, but in my mind, a lot of the shorts, like they could have had a terrible earnings in my mind, and that doesn't really matter because I think at the stage that they're in right now, that their technical capabilities are much more important. Demand for their launches, just to kind of give them that financial path forward, is kind of helpful. But the end goal here is not, getting from 10 to 20 to 50 launches per year. The end goal is, kind of vertically integrating and launching a satellite constellation that can be a kind of source of high margin recurring revenue. So that's kind of the end goal that I'm more focused on, and they may very well have some bad quarters between now and then, but the technical capabilities in my mind are way more important.
Yeah, it's going to be lumpy, different quarters, right? Because I think they also mentioned, I heard their CFO mention that I think they're accounting for the revenue of the launches going forward. From this point forward, they're accounting for the revenue at the time of launch. And up till now, I think they've been accounting for the revenue, like accruing it over time up until the launch, So now it's going to be more lumpy going forward, I think, the revenue they take in. So it'll be interesting to see how the stock reacts quarter versus quarter.
Yeah. It'll take some analysis to really understand that. And I'm sure some people will freak out along the way. They'll be like,
some people misinterpret it.
Like if you go from 4 launches in a quarter or 3 launches in a quarter down to 1, people will be like, oh my gosh, like revenue dropped. What happened? Like this company's not a growth company.
Yeah.
So I'm sure there's going to be no shortage of that situation, and smart investors will need to kind of see through that.
Yeah. All right, let's go to the next question here. From Will T. Question: do you think Tesla is a good investment against inflation? I like we were talking about before, I think equities in general, is a good investment against inflation, not just for the fact that inflation itself makes everything else more valuable, the price of, gold or Bitcoin or real estate or car, everything, but also stocks, and then, there's ebbs and flows within the stock market, of course. And so that can, be highly uncorrelated to actual inflation. But in the big scheme of things, as inflation goes up, equity should go up. But then on top of that, you have the performance of the stock. It's the business through, technology and disruption of the technologies it's bringing on. And Tesla is probably the most disruptive company out there. That's why it's getting such a big market cap. So that disruptive technology really is a deflationary force. And I know Cathie Wood talks about that a lot, for example, and I agree. And even Janet Yellen, I think just this morning mentioned in her speech, I saw an article that she still reaffirmed that by the end of the second half of 2022, inflation will wane or kind of slow down. And I believe it's transitory. There's questions of whether transitory means 6 months or 1 year or 5 years, but I think it's a lot. It's somewhere between 6 months and 18 months, and it'll probably be much more acceptable or tolerable by the end of next year, is my opinion. So what do you think, Matt?
Yeah, I think so too. I mean, you do have, I think there's going to be different pockets of inflation, though. I think people think
Yeah.
of inflation as just kind of being one thing. But I think Kathy Wood is absolutely right in kind of her assessment that you've got disruptive technology like Tesla is pursuing.
Hmm.
Um, and I've talked about this within the energy space where energy costs are going to keep going up for these legacy utilities who are using, coal and natural gas and transmission and distribution lines and O&M for their workforce. And then you're going to have distributed solar and batteries who their cost is just plummeting. And so, that's going to be a deflationary force it's going to create winners and losers. And like chicken breast and, like goods at the store, which, are not subject to like massive disruption. I'm sure
Yeah.
those are going to feel inflationary prices more than, some like, semiconductors, or maybe semiconductors is a bad example, but, disruptive, innovative technologies. So
Yeah.
like, I think we're going to see inflation in the workforce. Maybe this is a better example where, there's such a labor shortage going on, at least in the United States right now. But who knows, 5-10 years from now, the Tesla bot will be creating downward pressure on wages in many
Yeah.
places. So, there's going to be pockets, there's going to be winners and losers, but I think Tesla is definitely, a good kind of investment if you're concerned about inflation. Um, as you were saying, Emmet, the stock market in general does get helped, by inflationary pressure. But I would say though, within their like high growth entities, and Rocket Lab would even be an example of one of these. They could get hurt in the short term if inflation kind of gets out of hand, because investors are going to flock to, quote unquote, safer assets that have, more upfront cash flows. Tesla's kind of in
Yeah.
the middle ground, I think, relative to like a Google or an Apple, which really have just crazy cash cows right now.
Mhm.
So you could see some asset rotation if it really gets out of hand, away from super high growth into kind of more cash cow dividend paying companies.
Yeah, I agree. Yeah. Next question is from Salza2 on YouTube live comments. Shift 4 Payments just signed a deal with SpaceX to process Starlink payments. Market cap for Shift 4 Payments is only $6 billion. Could be multi-bagger opportunity to piggyback on SpaceX. Thoughts? I mean, personally, I haven't been able to dive into Shift 4 Payments too much. The only thing I really know is like the CEO went on the SpaceX launch, seems to have a rapport or relationship directly with Elon or senior management at SpaceX. So that's good for his business. Obviously, if SpaceX and Starlink becomes the $1 trillion company that we think it could become by the end of the decade, then yeah, Shift 4 would be a huge beneficiary in some ways of that. But let's say if SpaceX and Starlink were out of the equation, let's say Russia blows up a bunch of satellite debris and ruins all space commercialization for everyone, then is Shift 4 Payments worth a whole? I don't know. I mean, I don't know enough about their business to have an opinion other than that, right? So I don't know, Matt. Did you take a look at Shift 4 at all a little bit, or I know some people
Yeah,
that we follow are talking about it.
it's been a kind of popular name in the Tesla Twitter community lately. I think largely because of just kind of the connections with SpaceX and Elon. So I tried to be neutral on it and just give it a thought. So I just ran some back of the envelope numbers of, if Starlink gets to be, X, $1 billion in recurring revenue per year, and Shift 4 gets 1% of that, what would that look like? And to me, the numbers did not look super compelling. So Emmett, like you were saying, I've not done a deep dive on this, but in reading some of the threads out there, it seemed like the bull case was, it's tied to Elon and we like Elon a lot. And I'm certainly
Yeah,
oversimplifying. Like that's
yeah,
almost a joke to kind of oversimplify it that much. But I didn't find the actual investment thesis super compelling on its own, and I didn't see even a very bullish forward-looking view on how big Starlink could be. I didn't see that translating into like a 10 or 100x opportunity for Shift 4. So I could certainly be wrong. I didn't spend a whole lot of time on it, but that was kind of my
yeah.
take.
From Alex B. Question: any thoughts on low orbit close encounters risk? There's an article that says SpaceX already responsible for half of such encounters. There were 2 satellite collisions in history, by the way. Yeah, we were just talking about that with the I mean, I think the biggest risk is the satellite debris. When some of these satellites are getting blown up, it seems like to be a major problem if some countries start doing that more often as testing their own defense systems or whatever they're justifying the reason for doing it. It's only, I think the US and India and Russia are the only countries to have done it now or something. But if other countries start doing the same thing, yeah, it could make a lot of problems for space debris. And but in terms of like close encounters, that's something we should have asked on that roundtable with Joe and Paul. That's a better question for them overall, I guess. What do you think,
Mhm.
Matt?
Yeah, I think so. We kind of did address this a little bit, so I don't want to dwell too much on this, but there is this concept of the Kessler syndrome, which is basically kind of like a mathematical, look at. There's always some probability that a satellite will get struck by some random piece of space debris, and then the more of those collisions that you have, then the more space debris there is. So everybody's probability rises, and if that happens enough, then you can get this, kind of runaway syndrome where like all the satellites end up breaking apart, and then there's more debris, and so then everything else, it just kind of runs away, and that's a very realistic possibility in my mind. But again, that would only uh, limit some orbits. So I think SpaceX is in an incredibly low orbit, is my understanding for their for Starlink. So there wouldn't be as many issues there, and then the fact that SpaceX does have a lot of controls to actually speed up deorbit and the burn in the atmosphere, I think is really important. So
Yeah.
something to watch for sure. Yeah, and I'd leave it at that.
Master the art of living. What are your opinions about buying options on margin versus selling stock and using that capital to buy options? I mean, I think when you pay for the options premium, you're actually paying with cash. Like I don't think you can, like you can't margin like if you have an account with, $10,000 in it and no, it's just cash. You can't buy more than $10,000 of option premium. I don't think, not unless maybe, yeah. I mean, I think what you're asking is maybe like if you own $10,000 of stock, then buying, lever margining that stock to buy an additional $5,000 of option premium. So you're borrowing $5,000 against your stock versus selling $5,000 of your stock to buy $5,000 option premium. So then you have 5,000 option premium, 5,000 stock, which is much more conservative and I think less risky. Yeah, because anytime you're increasing your margin, whether it's to buy more call options or buy put options, if you're buying put options to prevent, a downswing in a stock that you're heavily owned, my personal account, I own a bunch of Tesla and I bought a little bit of put options the worst time, like yesterday when it was $1,000 and just worried that the stock could drop to 800 or something in the next couple of weeks, just in case, but those put options became pretty much are going to become worthless probably in a week or two. But I knew that going into it, but I was just buying the put options as a hedge. So if you're buying put options for that purpose on margin, maybe that's not as risky because you're actually hedging yourself. So it's a hard question to answer. Generally, I think using margin or increasing margin is not a good idea in general. Not unless it's like your real play money account and you're okay to lose all of that account potentially on a margin call. But in general, I'm not a fan of using much margin. Yeah.
Yeah, I would agree. I mean, I think a lot of people that use margin do that on equity, and that's certainly risky, but not as risky as going into margin on on options. I mean, in my mind,
Yeah.
options are already risky enough.
Yeah.
You don't want to like I always had in the back of my mind is as I was making some options plays. How would I feel about this going to zero, or if Tesla gets cut in half, am I going to be all right, under that scenario? And so if you're putting yourself in a situation where, you'd have serious financial loss, or you have like half your shares called away, that's something I would not recommend, because I mean Tesla's relatively safe in the long term, but we could be wrong on, and maybe in the short term Tesla goes down 30% and stays there for a while. That's possible. So I think you need to be prepared mentally to handle that scenario before you consider going into margin.
Yeah. Next question. Thoughts on Rivian puts? Seems expensive. Yeah, I looked at them this morning briefly. Let me see here. Again, I mean, Matt, we've talked about the Rivian puts.
Rivian, everything seems expensive right now. It's crazy.
That's nuts. I mean, I was looking at like puts for like basically like if you go out to like Jan 2023, like a year from now, like the 70, I would look at the lowest strike puts. Like I would buy like $50 puts or $30 puts if I could for like a year or two out, because I would think those would be really cheap and you get a good return if it goes down to $10 a share or something. But the $70 puts is the lowest the strike I see, like a year out at least. Maybe it'll go lower in time. Maybe they'll have some lower ones. But right now, 70 is the lowest. And for like January 2023, they're $13.50 right now for $70. That's the stock has to like get cut by like 60% or more for that to be in the money. And you're paying $13. If it went to zero, the most amount of money you'd make is like 5x, like on your, it's not very good. Like that's if the stock, it's not going to go to zero. They have enough capital. They're not going bankrupt. It's not a fraud like Nikola. It's more just like an overvalued stock. Like I think Nikola has a business. Maybe if they're valued at 5 or 10 billion, it'd be like, okay, that's not bad, but
do you mean Rivian?
Rivian. Yeah. Nikola didn't have a business and you can see it going to zero potentially, even though it hasn't yet. But, they're so expensive. I think the implied volatility will come down in time. I'm looking at the implied volatility even for January 2023. It's like over 100% the implied vol on these strikes. So the options market makers are making a killing selling these options right now. But
yeah, I mean, it's the first day they're traded, so implied volatility is going to be really high right now. It'll come down over the coming weeks. Maybe it'll be a better play then. But for my money, anytime like the max you can make on a put is like 5x, I'm going to stay away from it. That's calls are nice because the upside is unlimited. And if you can there's scenarios where you can get 10, 15, 20x on puts, and those might be attractive plays, but for right now, I wouldn't touch the puts.
Yeah, just expensive. I wanted to go over a question real quick. I saw one of my favorite Twitter handles I follow answered a question from Tesla Economics. He says, you guys think Tesla will run up after Elon announces he is done, or when the market predicts Elon is about X% done and front run the news? So thanks for putting that question up there, Alec. Yeah, I think this is a great question me and Matt have been asking ourselves. And we think that the market is going to really, we think there's a high chance. I mean, maybe it's not even probable, but I'd say it's close to 50-50 that Tesla is going to run up after Elon, not even after he announces he's done, but when market participants, institutional buyers and sellers and portfolio managers, traders, when they all kind of come to a consensus that it's close to being done. Doesn't have to be done yet, but it's like close enough where they're like, all right, I'm getting back in. And that could be the beginning of today, even, after such a drop of 20% in a few days, the first few days, an overreaction. So hopefully today's the beginning of that. But I think there's a good chance there's a really fast, nice run up in Tesla stock. It's not definite, might languish around $1,000 a share. Who knows? But it could easily get to $1,200 or $1,400 a share or beyond, with the kind of rumors, or not even rumors, it's really more like early indications of a massive fourth quarter production and delivery record again, beating all expectations. So if that becomes more of a reality, or that news kind of becomes more evident, then I think there's a really good chance of a nice run up here, especially if the macro markets continue to kind of float up higher like they are right now. Like, can't see all this money going to Rivian and Lucid like we see today, and not Tesla get a big piece of that run up too, so it's exciting. But anything can happen. Got to be prepared for all scenarios, but yeah, there's still certainly an opportunity here.
Yep.
All right, we'll make this the last question since we're about at the hour mark. And I know, Matt, we have another thing after this. From Dan Mac 51 on Twitter. If Astra can achieve a successful low Earth orbit test, would you change your opinion versus Rocket Lab? Yeah, I mean, Astra, we talked a lot about it not a lot, but it was referenced several times, especially by Joseph on the roundtable discussion part two, if people haven't heard that yet. But he's very, I would say bullish because he's not an investor, so to say, but on the business or the company itself, he's bullish on the company being successful in that it's going to succeed in launching its small satellites. It has to deal with the U.S. Air Force. It's launching from Alaska. Its goal is to be able to achieve like rapid launches of small satellites, day after day after day. In case of an EMP attack or electromagnetic pulse attack, which is like a nuclear bomb detonating in space over the U.S., pretty destroying all the current satellite constellations we have, basically for the military and everything. Then Astra could be like the redundancy backup to quickly start launching new satellites up to replace all the ones that were kind of destroyed from the EMP blast. So I think that military contract with is a nice sign for Astra to have, and he thinks that Astra is really on the cusp here of being successful with their next, possibly their next launch. And so, yeah, if Astra, we have to study it more. We haven't really dove into it, but that was, certainly a signal that maybe they could be a successful business of some sort. I don't think they're nearly as vertically integrated as Rocket Lab, but I haven't studied Astra to really be confident in that opinion. What do you think, Matt?
Yeah, we've talked a couple times about. I think the space industry is kind of prime for all boats to rise. So I think there's going to be plenty of room for multiple players in the space in the long term. So what I would be watching over time is, can Astra kind of flip to get that crown from Rocket Lab as being kind of the clear second place. That would be concerning. But even if that were to happen, Rocket Lab could still vertically integrate and get their constellations launched and start providing those services. The kind of disruption to that narrative is what I would be kind of watching out for. Or is there somebody who's at a cheaper valuation showing more technical capability to be able to position themselves in the long term? That's what I would watch. But there is this concept, especially critical in aerospace and defense, of having like strategic redundancy, where you don't want to rely only on SpaceX, for example, to handle military launches, because what if SpaceX goes bankrupt, or their new technology just completely fails, or whatever? Anything can happen with an individual company. And so if you have multiple technologies capable of achieving the same results, the same launch results, you may be willing to pay a premium, or pay for a less efficient provider of those services, just to have that redundancy in case you need it for, like national defense needs or whatever. So I think it's not the right way to think about it as like, Astra will succeed at the expense of Rocket Lab, or that Rocket Lab will succeed at the expense of SpaceX. I do think there's going to be redundant capabilities, and that's going to be a good thing. But I also think these companies are going to be targeting different things in the long term, and that's going to create opportunities for each to do really well.
Yeah, absolutely. Yeah, so that was a great discussion, and just so people know, we're continuing to provide more content with recorded interviews from time to time. Hopefully later this week we'll have an interesting discussion with a guy I've been following for many years on sports betting, of all things. Fantasy football I used to be into a lot. I don't really engage in it much anymore the last couple of years, but the way this gentleman, Chris Liss, the way he philosophically looks at odds and probabilities and kind of tries to see the signal from the noise in the sports world. He also applies it to the real world in many ways, whether it's news headlines or even Bitcoin and cryptocurrency. He's huge on Bitcoin, so we'll talk to him about Bitcoin. He's been a skeptic on Tesla in the past, and I think he's sort of coming around. But just the way he looks at the world, it's interesting to me, and we're going to get him on to talk about parallels of kind of sports betting and philosophically looking at that type of stuff with options, betting on options and such. And it should be an interesting, unique conversation. Then we have a conversation with a venture capitalist, kind of a consultant, and that should be interesting. And we have some others lined up pretty soon. So hopefully we'll keep growing our channel, and we'll keep doing these weekly live streams as well. with Twitter Spaces and our YouTube Live channel at the same time. But for anyone, all these chats are recorded on our YouTube channel, so you can always listen to it later. And with that, we'll end it. And hopefully Tesla keeps going to new highs here for the day, 1,050. Maybe we'll end.
Nice.
Yeah, let's end above 1,050 today. Maybe Yashu will do one of his power hours and drive it home today. We'll see.
Well, I'll eat some oranges, and then we need Daly's stair power. Sounds good.
Yeah. All right, guys. Good chatting. All right.
Thanks.
Talk to you later.